Hey my Skye Savers, welcome back to my channel. I'm Kim and this is World of Skye, a world for women and moms looking to save money and get the most bang for your buck. And today we're going to talk about how you can make sure that you are maximizing your savings by understanding your health insurance. Believe it or not, there are oftentimes errors, yes, in your medical billing. And if you don't understand your insurance and the plan, these mistakes can cost you big. I personally have experienced this myself, and I have had to challenge insurance companies to pay claims that they originally denied. But had I not known the proper information, how my plan and the terms worked, I would not have been able to challenge it. I don't want that to happen to you. So today, let's talk about important medical insurance terms that you need to know and what that means for you money-wise. Before we get into the video, if you have not already subscribed, please make sure that you subscribe to my channel. Trust me, your wallet, your purse, your bank account will thank you. Okay, so now let's get into this video. So let's start at the beginning. You'll need to pick a health care insurance plan. Whether that's being offered through your employer or you're self-employed, you want to make sure that you are picking the right plan for you and your family. The most common type of plans are HMOs and PPOs. HMO, which stands for Health Maintenance Organization, offers healthcare services only with specific HMO providers. So under an HMO plan, you may have to choose a primary care doctor, and this doctor will be your main health provider. And then that doctor will refer you out to other HMO specialists if they see the need for it. And under HMO plan, services from providers that are outside of the HMO network typically are not covered unless there is an emergency. The other type of plan is a PPO, which is a preferred provider organization. And with PPOs, they typically offer more extensive coverage for services of healthcare from the providers that are within that network. But they also typically will cover some of the costs if you see a provider that is not within the PPO network. So in general, PPO plans do tend to offer a little bit more flexibility than HMO plans, but they also tend to be more expensive. So those are the two types of plans that you may see when you're searching for healthcare. So you'll want to pick the type of plan that you think best suits you and your family. So moving on, now that you've picked the plan that's best for you, you want to take note of what that plan's benefit period is. So a benefit period is when the services under your plan are covered. It also defines a time when benefit maximums, deductibles, coinsurance limits build up. All benefit periods have a start date and they have an end date, and typically it is 1 calendar year. So an example would be that your benefit period starts on January 1st, it ends on December 31st. So that is a period that would be used to determine eligibility and your, like I said, deductibles, your coinsurance, things of that nature. So if your benefit period is that January 1 to December 31st and your plan covers 10 physical therapy visits and you need to have an 11th visit during that same benefit period, it would not be covered by your plan. So that's just an example. There's numerous examples, there's numerous situations, but in general, that is what the benefit period is referring to. Okay, so the next thing, let's talk about in-network providers versus out-of-network providers. So first things first, what's a network, right? What is a network? A network is just the facilities, the providers, the servicers that your insurance plan has contracted with to provide you with healthcare services. It is very, very important. Listen up. It's very important for you to know before you see a provider, use a service, go to a facility, if they are in network or out of network. This will determine how much your plan does, or more importantly, does not cover, okay? You want to know that information if you end up going out of network to a facility that's not included. You may be on the hook for those charges and you don't want that. So a in-network provider, or you may hear it called a preferred provider, is a provider that has agreed with your health insurance plan to offer you services at a discounted rate. An out-of-network provider or a non-preferred provider does not have a contract with your insurance company to provide you a discounted rate. So typically you will pay more to see an out-of-network provider. Some plans don't cover anything. You hear that? Some plans don't cover anything if you decide to choose a provider that is out of network. So like I said before, double check, triple check to see if your provider is in network or out of network. It is going to make a huge difference when it comes to billing and what you need to pay for your healthcare services. Okay, so we've covered all the important things when it comes to picking your plan and picking your providers. Now let's cover the terms that are all about dollars and cents. Make sure you stay till the end of the video. I promise you, I'm gonna tie it all together to make it make sense for you. The first term is a premium. And the premium is the payments that you make to your insurance provider to just keep your coverage, right? So it's the month, it's like car insurance. You pay your car insurance every single month so that you can have insurance. It's the same thing with your healthcare insurance. So your premiums are due at a certain time every single month, and you need to pay your premiums whether you have used your insurance or not. If you have insurance through your employer, you will see your premium deducted from your paycheck every single pay period. If you're enjoying this video thus far and it's been helpful and you've learned something, please be sure to give the video a thumbs up and don't forget to subscribe. Now let's talk about deductibles. Your deductible is the amount that you pay for healthcare services before your healthcare plan even starts to pay anything. And your deductibles are based on that benefit period that I talked about earlier in the video. So your benefit period is typically a calendar year, but your deductible would be based on and calculated within that time frame. For example, let's say that your deductible is $1,000. Your plan will not pay anything until you have met your $1,000 deductible for covered healthcare services that are subject to your deductible. Keep in mind that your deductible may not apply to all services. So things like preventative care, you may not have to meet your deductible before your plan actually pays for them. So when you are choosing your plan, take note of how much your deductible will be, and then make sure that you plan accordingly to know that you're going to need to pay that full deductible before your healthcare plan will kick in. And this is going to vary for everyone, and what plan they choose based on how high or low the deductible is would be based on your health, your background, how often you actually see healthcare providers. So it is very personal, but keep in mind, whatever plan you pick, you're going to need to pay that deductible before your insurance plan will kick in and help you out. The next term is coinsurance. Coinsurance is your share of the cost for covered healthcare services, and it's usually calculated as a percent of the allowed amount for that service. For example, it could be 20%, your coinsurance could be 40%. It really just depends on your plan, but you would pay your coinsurance plus any deductibles that you owe. Okay, so here's an example for coinsurance. If your healthcare plan's allowed amount for an office visit is $100, let's say it's $100, and you've met your deductible and your coinsurance is 20%. So you would pay 20% of that $100 office visit, so you would be responsible for $20. Your health insurance plan would then pay the other 80%, so they would be on the hook for $80 of that $100 office visit bill. So that's an example of how your coinsurance works. Keep in mind, with many plans, coinsurance does vary for in-network versus out-of-network providers. So your coinsurance for in-network providers could be like 20%, but your coinsurance, if you see a provider that is out-of-network, could be 60%. Okay, so you see that difference? That same $100 office visit that we talked about, if you see someone that's in-network, you're going to be responsible for paying $20 for that visit. If you see someone that is out-of-network, you would be responsible for paying $60 for that same visit. You see the difference there? This is why it's cost effective to stick with in-network providers if you can. Next, let's talk about your copayment or copay. This is the amount that you pay directly to the healthcare provider at the time of the services that you receive. So your copay could be like $15, maybe it's $30, but you would pay it directly to the healthcare provider at the time of service. You may have to pay a copay every single time that you see a provider, depending on the plan. Not all plans have copays. For plans that do have copays, the copays may be different for in-network versus out-of-network providers. Again, out-of-network providers would likely have a higher copay. And the last term that we'll talk about today is your out-of-pocket limit or maximum. So your out-of-pocket maximum is the absolute most that you would pay out-of-pocket within your benefit period. So typically, again, that calendar year. Once you have hit your out-of-pocket limit or your maximum, your health insurance then kicks in and covers 100% for the remaining benefit period. Please note that your out-of-pocket limit does not include the premiums that you are paying to your insurance plan every single month. Some plans do not count all of your co-pays or all of your co-insurance or deductibles, and they may not also count anything that you paid out-of-network provider. So again, this one is a very plan specific. You do want to have a good understanding of what payments that you make out will be included in your out-of-pocket limit so that you can be tracking that information. Okay, whew, that was a lot of information. I know. So let's tie it all together as I promised to make sure that you are really understanding these concepts and these terms so that you can maximize your savings when it comes to your healthcare. So let's walk through this example of how you and your health insurer will share costs. So let's use me. Your example is Kim's. So Kim has a plan and the benefit period is January 1st through December 31st. My plan's deductible is $1,500. My co-insurance is 20% and my out-of-pocket maximum is $5,000. Again, remember your deductible, your co-insurance, your out-of-pocket maximum, they're going to calculate all of that based on your benefit period. Okay, so with the information, let's walk through the first example. So in this first example, I have not met my deductible of $1,500. Remember, that is the amount that I need to pay before my insurance starts to pay anything. So I need to go to the doctor and the visit costs $125. I would pay $125 for that visit and my healthcare insurer would pay $0. They wouldn't pay anything for that visit. Okay, so remember, you must pay your deductible before your plan will start to pay anything. Second example. In this example, I reached my $1,500 deductible, so I paid my deductible. So now that I've hit my deductible, my co-insurance will start to kick in. And my co-insurance is 20%. My next visit to the doctor is $75. And so now that my co-insurance has kicked in, I will owe 20% of that $75. So I need to pay $15. And then my healthcare insurer would owe 80% of that $75. So they would pay $60. Okay, so you get that. So after you've met your deductible, that's when your co-insurance kicks in and you start to split the cost with your healthcare provider. Third example. So in this third example, I have hit my out-of-pocket maximum. So I've paid for all the different visits that I've had throughout my benefit period. I have paid a total of $5,000. That is the maximum amount that I need to pay according to my plan. So now at this point, my plan will cover the full cost, 100% of my healthcare services for the remainder of that benefit period. So I need to go to the doctor. So my next doctor's visit is $200. I would actually pay $0 this time because I've hit my $5,000 maximum out-of-pocket cost, and the healthcare insurer would pay $200 for that visit. So I've walked you through some examples of how at the beginning of your benefit period, you're going to be responsible for most of your healthcare costs. Once you get towards the middle, you're going to be splitting it with your insurance provider, and then as you get towards the end, if you hit your out-of-pocket maximum in the year, then those costs shift to the healthcare insurer. So I took you from kind of beginning to end within a benefit period with those examples. I hope that they were helpful. If you have any questions, be sure to leave them down below and I will answer them for you. If you need to go back and rewatch this video, rewatch it until you understand, because choosing the wrong plan, choosing a out-of-network provider can cost you big money in the end, and you do not want to have an unexpected medical bill just because you didn't understand what you were going to be on the hook for when it comes to your healthcare costs. Before you go, please be sure to subscribe to my channel. I do post new videos every single week and they are pertaining to saving you money in some fashion. If you like to save money, I'm your girl. Please be sure to subscribe. That's it for now. Thank you so much for watching. Again, I hope this video was very helpful. I appreciate you and I'll see you in my next video. Happy saving.